Let's cut straight to it. Every time there's a recession, some people panic and some people profit. And if you don't know the rules of the game, chances are you'll end up on the losing side. Not because you're not smart enough or rich enough, but because no one ever broke it down for you like this. So let's change that. In this video, I'm going to walk you through exactly how to profit from a recession, not just survive it. You'll learn what actually causes market crashes, how to spot the early warning signs, the biggest mistakes people make, and the exact mindset and strategy that turns downturns into major opportunities. Let's get into it. Section 1. What is a recession really? Most people think a recession is just when everything crashes and we're all screwed. But that's not entirely true. A recession simply means the economy shrinks for a period of time, typically 2 quarters or more. Businesses slow down, spending drops, unemployment rises. But here's the part most people miss. Recessions are part of the natural economic cycle. They've happened again and again for centuries. The dot-com crash in 2000, the housing collapse in 2008, the COVID shock in 2020. And every single time, every one, the economy eventually bounced back. The markets recovered, and those who stayed patient made money. So if you take one thing from this video, let it be this. A recession is not the end of the world. It's just a reset. And when you know how to move during a reset, that's where the real growth starts. Section 2. What causes a market crash? Crashes don't just fall from the sky. They usually build up over time. And while no 2 recessions are exactly the same, they tend to follow a pattern. Here's how it usually plays out. Easy money floods the system. Low interest rates, high borrowing, tons of cheap credit. Everyone feels rich. Asset prices soar. Stocks, real estate, crypto, it all booms. People start buying things they don't understand just to not miss out. The bubble forms. Speculation gets out of control. Companies are valued way higher than they're worth. Reality gets ignored. Something triggers a pop. Maybe interest rates rise. Maybe inflation spikes. Maybe a global shock hits, like war or a pandemic. Panic sets in. Everyone rushes to sell. Prices crash. The media pours gasoline on the fear. And just like that, boom, we're in a recession. But here's the kicker. The warning signs are usually there. Most people just don't see them or choose to ignore them. Section 3. How to spot a recession. Early. If you know what to look for, you can start preparing before the crash hits. Here are some red flags that often show up before a recession. The Fed starts aggressively raising interest rates. Inflation keeps rising while wage growth stalls. Major companies start laying off workers. Stock market volatility increases. Big up days followed by big down days. Consumer confidence drops. People stop spending. Credit gets tighter. Harder to get loans or approval. You don't need to be a Wall Street analyst. You just need to watch the patterns and know how to connect the dots. When you see those signs lining up, that's your cue. Tighten up, stack cash, and get ready, because opportunity is about to knock. Section 4. Mistakes people make during a recession. Now let's talk about what not to do, because this is where most people lose money. Not during the crash, but during the reaction. Mistake number 1, panic selling. People see their portfolios drop 20, 30, even 50%, and they hit the sell button. But here's the truth. You don't lose until you sell. If you ride it out, and better yet, keep buying, history shows that markets rebound. And those dips, they become the buying opportunities of a lifetime. Mistake number 2, trying to time the bottom. You will never know the exact day the market hits the lowest point. Even professionals with billions of dollars can't do it consistently. And by the time it feels safe to invest again, the market's already up 10, 20, maybe 30%. Mistake number 3, chasing hype. Every crash brings out fake gurus with crisis-proof stocks or recession-proof crypto. And guess what? Most of it's garbage. Stick to things that are proven to bounce back. Index funds, solid dividend stocks, real businesses with real cash flow. Section 5. How to actually prepare for a recession. So what should you actually do? Here's your blueprint. Step 1. Build an emergency fund. Start with 3 to 6 months of essential expenses. This gives you a buffer if you lose income or need cash quickly. Step 2. Eliminate high-interest debt. If you're carrying 20% credit card debt, you're fighting an uphill battle. Pay it down. Now step 3. Automate your investing. Set up recurring deposits into a Roth IRA, 401k, or a brokerage account. Dollar cost averaging helps you invest regularly without trying to time the market. And when prices drop, your money buys more. Step 4. Diversify your assets. Don't bet everything on one stock or even one type of investment. Own a mix of stocks, ETFs, maybe bonds, real estate, or even a small portion in gold or crypto if you understand the risk. Step 5. Stay consistent. Consistency beats intensity every time. Even if it's $50 a month, do it every month, especially when the market's red. Section 6. Where the opportunity lives. So here's the fun part. When the market crashes, everything goes on sale. Stocks, real estate, even entire businesses. You can buy shares of world-class companies at 30, 40, sometimes even 50% off. And if you're investing in broad index funds like the S&P 500, that's like buying the entire market on discount. Here's a real example. If you had invested just $1,000 in the S&P 500 in March 2009, right after the 2008 crash, you would have had over $4,500 by the end of the decade. And that's without picking any individual stocks. This is why the wealthiest people love recessions, because they know the math. They know that buying low and holding long-term is the real cheat code. Wealth mindset. This part is critical. Recession investing isn't just about what you do with your money. It's about what you do with your mind. You need to be able to act when it feels uncomfortable, to move while others freeze, to keep learning when others tune out. Warren Buffett said it best. Be fearful when others are greedy, and greedy when others are fearful. It's easy to follow the crowd. It takes real discipline to go the other way. But if you can build that mindset now, during hard times, you'll be unstoppable when things turn around. So here's your mission. Don't wait until the next crash to get ready. Start now. Build your emergency fund. Set your plan. Learn how money works. And most importantly, stay calm when the rest of the world is freaking out. Because wealth doesn't disappear during a recession. It just moves. And now you know how to be on the right side of that transfer. Drop a comment and tell me, what's your next move? Whether you're starting small or going big, I want to hear what you're doing to recession-proof your future. And hey, if you found this valuable, hit the like button, subscribe, and turn on the bell so you don't miss the next video. This channel is all about giving you the tools to build wealth, stay smart, and take control, even when the economy's upside down. You've got this. I'll see you in the next one.